closing beat, everybody. Happy Wednesday to you. We're officially at Wednesday. Yes, I know that now. Sorry, I got a little distracted here before the show. I was watching a high-speed car chase out in California, and I'm like addicted to this thing. Like, come on, man, get him, you know? So a little distracted there, but not distracted with what we're going to share with you today. Hopefully going to teach you something a little bit new, go through a few things that maybe you have not heard anywhere else. That's our goal here. We are educating financial advisors. Hope you'll check us out at jazzwealth.com. While other advisors are playing checkers, we are playing chess here. And one in particular was with a really young client. I was working with Haley, who likes to work with the younger clients here. And the kids were trying to both save for retirement and save money to buy a house. So we came up with a really unique strategy there that allows them to do both of that without using any extra dollars. So that was a lot of fun there. It's kind of fun to, you know, go back to relate with the kids every now and then. You know, you spend life in retirement land, and these kids had a different goal. So you can please check us out at jazzwealth.com. Any age is welcome. All right. We're going to slow things down here a little bit today. All right. I'm going to ask you to just do one thing for me while you watch and you learn. I'm going to ask you to pretend that you are me, a financial advisor. We manage our own portfolios. We maneuver positions inside and out of those portfolios. We do not buy mutual funds and ETFs. And so imagine that we now manage just over $300 million. It's your job. Your livelihood depends on keeping everybody's accounts growing, making the right decisions at the right times. We're killing it right now, doing great, so I'm very happy. But now you look at today's market and you go, what's my job today? I need to continuously add value to clients. Remember, you're me. You have to continue to manage these funds, okay? So as we go through this, I want you to kind of think, would you do something if you were me? Would you sit on your hands? Would you go all in? Would you take all your profits and potentially go to more cash? What would happen? The market is in a really, really interesting spot right now where make the wrong decision and you lose the game, right? So a little bit of stress as we go through this. So let's take a look. We have the S&P sitting here in getting back to what we would call equilibrium. Okay, it needs a moment to think, right? We had this wild move up, this wild, not kind of wild pullback along the way there over the last month and a half or so. And now we've found our way back to where about the same amount of people that participated from here to here, about the same amount of people have a loss as much as have a gain. Right? So they call it equilibrium, or, you know, the glass is half full, so to speak. We're basically right in that area. So anyone that happened to maybe buy at the highs, right, is sitting on a smaller loss than they had. Anyone who happened to buy the breakout or buy somewhere in here, now finally, again, has a little bit of a profit. They had a great profit. It was all taken away, and now they have a little bit. So we have a tug of war going on. What happens is you end up with these days, just like today, and I would argue the last 2 days as well, but you have these days where there's small, little, tight range days. We say there's only 3 ways that can happen. So if you don't know this, there are 13, if you use candlesticks, there are 13 different candlesticks that you can see, right? On a daily basis, there's going to be one of 13. That's it. There's no more. Well, what we've had over the last couple of days is one of the 3, and the way it breaks down, if you want to know, you go on our, if you're one of our clients, just go in our classroom portal and just search candlesticks. There's 3 classes just to, you know, brushing up on your skills a little bit. But if you want to know, there are 5 green ones. So see how there's some green and some red? There's 5 green, there's 5 red, and there are 3 where we say, I need more information. I can't act on that. I'm not getting enough, right? But let's say it's one of these right in here. It's big, solid green candlesticks there that are really solid, tight, high and low between the open and the close. You go, I learned something from that. I learned that there's a lot of strength on this particular day. Well, when you go in here, you go, I need more information. And there's a little bit of a tug of war. It's a little bit of back and forth there. Now, if we look inside the S&P, 43% of the S&P today was up, and 57% was down, okay? 5 stocks had lost 5% or more, 4 stocks had gained 5% or more. What's that tell you? It tells you the market was, you know, a bit of a tug of war today, and there was no real news-driven positioning. I don't want to say news-driven events. There was lots of news out there, earnings and all kinds of news, just like every other day. but it didn't cause any position changes. So in other words, if the market had a tug of war type day, just up, down, whatever, couldn't seem to get anything going, but yet you had 25 stocks that had massive big days and 20 or 30 stocks that have massive down days. Well, that's an indication of, okay, that's a news-driven positioning day. Whatever happened over there was a big deal, maybe a sector or something. Whatever happened down here was a big deal. Could be a sector or a group of stocks that are all highly correlated. Well, we didn't have that today. So we have two things. Most people would look at this and go, oh, it's just kind of not really an inside day, but just kind of a narrow range day. There's not much I can get from that. We could take it one step further and go, it was an inside day, and there really wasn't any action where people said, I must be in or out of that stock today. I must be in or out of that sector. So really, really kind of interesting there. Now, you say, well, Dustin, I'm pretending to be you. What would I do on a day like this or a last couple days like this? Well, you could look for outlier positions. And if you're a nerd about it, you would say, I'm looking for relative strength or relative weakness, meaning if I find relative strength, I'm potentially interested in playing that momentum, adding to positions that are bucking the trend and continuing to go higher, or bucking the day's trend and continuing to go higher. Relative weakness, I may be interested in shaving some of those positions, or if I'm feeling contrarian, maybe I want to add a few bucks to a discounted position that for the moment is not participating in the market. So those are your choices, right? It gives you a little bit of work to do at least, so you're not sitting there all day doing nothing, right? Well, the trouble is you only have about 70 stocks to choose from, 68 in the S&P to be exact. That may sound like a lot, but the trouble is you only have those stocks that are showing relative strength, meaning they're within like 5% from hitting their highs, right? So if you look at the stock market, it's not within 5%. But if you look at a stock and it's just trading out, let's give you an example. They just had their earnings. Oops. See Chipotle. All right, so Chipotle very close to its highs, relative strength. While the market has paused, Chipotle continued to go for whatever reason is going on there. That's a concern as well. It's already extended. How happy would you be with me if you said, I'm going to join Jazz Wealth, I'm going to put my retirement with you, and Dustin bought Chipotle after like the 9th day higher? You couldn't have bought it on the 5th day higher, the 3rd day higher, hell, the 7th day higher. You had to wait till now. It'd be a little frustrating, right? So even the relative strength names have a little bit of trouble. Broadcom's another one. We have good relative strength. It looks like it's going to break out. And of course, we know Broadcom, you know the company there, right? So it looks like there's something interesting, but it hasn't done it yet. We've expended all this energy to get to the top of a potential breakout, but we haven't broken out. Would you be happy with me if I took a guess with your money? Remember, you're me today. I'd be pretty upset with you if you today said, after this move higher, you are now going to bet on a breakout. Boy, I hope you're right. I'm going to be pretty upset if you're not right. Cardinal Healthcare. One of the strongest names, it is the strongest name in the healthcare space, but one of the strongest names in the S&P in terms of being close to its highs. Okay, what do I do with that? It broke out. Earnings helped it break out. Good. Was I not watching it on this day? Like, why do we have to wait till today to buy it? You would be rather upset with me. And lastly, I just thought of it, Garmin. There you go. Same thing on Garmin. See, it's the same sort of look there. So a little bit tricky. All right, let's put that aside. Maybe there is some portion of the market that's overbought or oversold, and we could be contrarians, right? That same thing kind of we were just talking about. Well, not really. We're back to neutral. Remember this chart I shared with you in the past there? I said, hey, look, we have about 70% of the S&P is considered overbought. What makes you think it's going to go to 90? It doesn't normally go to 90, right? And then that flip-flop, so the market pulled back. Then we had all kinds of stocks that were oversold. They fall too much, right? So people can see that as a discount, right? And so you go, oh, great. We reverted to the mean. The market likes to revert to its mean. Look, over and over and over and over again. We get too excited. We get too scared. We find equilibrium. Where are we at now? Equilibrium. About the same amount of stocks are overbought as oversold. The rest of them are just chopping around doing nothing. We go back to the S&P. Where do we find ourselves? Equilibrium. So it took you all around the world there just to bring you back to, here's how we make the decision right now. What do you do? Right? You have only a few choices. Right? You become that person who, if you're an index investor, you sit and wait patiently. If you are a, what do you call it, a portfolio builder, if you're like me, you got to put stocks, you got to get them in there and get more growth. You better be very careful with what you're doing here. Somebody better be keeping an eye on what's going on. Okay, so what does that mean from here? At what point do we go higher or lower? What do we need? The market is currently now setting up for that next catalyst. I don't know what it is. I don't know what it's going to be. There will be some catalyst that causes a break in the stocks that are overbought to then pull back. Those stocks that I've just been showing you, Cardinal Healthcare and Garmin and stuff. Okay, they did great. There's nothing wrong with them, but they will maybe take a break. Something will cause that broad selling. It could also be that we lose our minds again and we just enjoy some crazy rally. I highly doubt that happens, but nonetheless, got to be prepared for that. All right, so let's go over to the NASDAQ then. The NASDAQ 100 anyways, about half the stocks were up, half the stocks were down. Well, that explains the little tiny range day that the high and the low were very close to the open and the close. It's like, okay, wow, kind of tough. Now, it still did finish positive, actually, so that's 9 days higher there. It's been a few years since we've seen that. You could look at the Russell 2000, right? Yeah, I'm not saying you buy small caps here. I'm just saying, you need to do something and you want to look around and see what options are available. Please don't mistake me for telling you, like, for whatever reason, now's the best time to buy small caps, right? It is the worst index year to date. In fact, it's the only one that's negative at the moment, year to date. 1/3 of all stocks in the Russell 2000 are hovering near their 52-week lows. Is that a good thing or a bad thing? Right? Some of you will look at it and say, that sounds like a deal to me, right? From a valuation standpoint, price to book, if you want to look it up, this is one of the cheapest times that we've, at least in the last 20 years, that we've seen the Russell here. So you say, okay, well, there's 1/3 of the stocks near the 52-week lows, and I like a good discount. Maybe I'll go look at those. Those are tough to get excited about as well if you're going to be counter trend. You think of, I'll filter somehow. To make it better, I got to pretend I'm Dustin today. So I'll look at stocks that have pulled back in the Russell 2000, but to appease Dustin, I will say they have to have some kind of earnings growth. I want to see stocks that maybe over the last 5 years, they've had earnings growth year after year after year, 5, 10%, whatever you want. That filters it out a little bit, right? That helps maybe make a smaller list, but let's take a look at those stocks. How can you get excited about something like Aaron's, right? Aaron's Rental Center. You might have some in your town. Yeah, it's extended a little bit. Yes, they have shown positive earnings growth over the last 5 years. It's an otherwise maybe kind of an interesting name if you believe the economy where it's headed there, but it looks as though it's freshly about to break down. I don't know if I want to mess with that. Right now, these sellers are winning the game. They've been winning this whole time. It's also fallen more than the Russell 2000. So I don't know, maybe Allegiant Airlines. Wow. Airlines are, they've had a rough go of it here lately. It's just bleeding. It's just bleeding. And not in that fast way where it's extended and you get excited about it. Go to restaurants. Cheesecake Factory. We all know Cheesecake Factory. It's a small cap stock. What in the world is going on here? It's like it's a heartbeat monitor, right? It just, what do you call those machines? They do that thing. There's nothing going on there. What is that, right? So I thought, just for fun, I know the guys like golf here. Look at Top Golf and Callaway. Same thing. What? Okay. Earnings growth. Obviously, they're expanding and seeing earnings growth. Okay, that's kind of cool. Why? It's in a severe downtrend, right? So the moral of the story there is, and even, what was the other one? I thought about this. I went to the gas station today. Utz brands. So I don't know if they're popular where you're at, but they're making a big push here in Florida. I'm starting to see Utz chips next to Doritos and all that stuff. Remember, I gave some grief before, so I'm not going to pay for the high dollar chips. I'm going to try these other ones. Here you go. So they're making a big push in here. I like the sales growth. I like everything I can kind of see about the company here. I don't want to bet that that's a bottom. Do I want to bet that that's a bottom while the Russell 2000 is still telling me it's very, very weak? So you see what I'm doing there? I was just trying to make today more of a lesson in a little bit of patience, a little bit of, I don't know, maybe discrimination against what you decide you want to buy. Be harder on yourself. Don't just randomly go add stuff because you are bored and have nothing to do. All right, stocks in the news here today. Here we go. All right, tale of two tapes here. Ready? So you got Rivian. They lost about, I don't know, 10% less than we were expecting per share. There's still a loss, whatever. Raised their total production estimates, all pretty much optimistic there. The Amazon deal, you've seen the Amazon trucks with the round lights on the front looking all funny and stuff. They just sneak by because they're electric. That deal's over. So we may see little trucks for UPS or something. I don't know. All in all, not too bad. The other side of the story is Lucid. This is a total different story here. This is a little bit tough. Cut their production estimates by like 20% or something. They expect to make 8,250 cars. These are not cheap cars, by the way. Total sales missed by 20%. Deliveries missed by 20%. Not good. They make a new low there. That's a tough one. It only gets worse. Robinhood. Robinhood officially in life support mode. If you look at their most recent earnings, which they just announced, their total revenue down 7%. They can't afford for that to happen. They're now losing. Transaction revenues in crypto, which they've been banking on, only $23 million. That's a lot of money to me and you. It's not enough for them to continue. Total assets. They say total. They don't manage it. So total assets that they have custody of is how they say that there, down 4%. The number of people using the app on a monthly basis, down 5%. That's not good. They make money when you press the buttons. They're now in life support mode. All right, Under Armour. Actually, not bad. I want to point this out. Here's one where I would be wrong. So Under Armour beats on earnings, but they lowered their guidance. One of the only stocks recently, at least that we've seen so far through earnings season, that lowered guidance, and the stock ended up being higher. So I just want to point that out. That's a little break of the trend there. Maybe. So what does that tell you? You just go, oh, I don't know, maybe that's not the theme of earnings season. You go, no, there's something else I need to see. They were talking about something. Maybe the guidance was lowered, but they had previously raised it. I don't know. You got to look through some of that stuff. So it tells you that there's something more to research there. Lastly, my favorite ticker symbol is going away, Hostess. You know them as Twinkies. The deal is done. They sold to Smuckers. So that is done. They will no longer be trading. The way that's going to work, we happen to own Twinkie or Hostess. So the way that's going to work is most of it's going to be cash that gets paid out. If you're a client of ours, you'll see that that position goes away and you have a cash balance almost for everything that you had. And then you're going to end up with a very small fraction of a share of Smuckers, which is not necessarily a bad thing because why? There you go. A bit of a discount there, at least in the short term. We'll see what we end up doing with it for you. Hey, Jazz After Dark, we're going to cover tonight the household finance issue, the Fed report that just came out, the data that wraps around all the credit that we have, whether it's mortgages, credit cards got a little bit of a rough data point there, $1.08 trillion. So we're going to go through that, take a look at how you can use that to get a gauge on the overall economy. And then we're going to go through the actual data instead of what you see in the headlines to show how they came to these numbers. Because if you think about it, this is what occurred to me. The Fed is telling us what the balances of our credit cards are. There's only 3 companies that have all of that data, technically only 2, right? Well, those companies make money by selling their data, which means they sold that data to the Fed. The Fed did not spend ungodly amounts of money on all of our credit reports, did they? No, they didn't. Otherwise, Equifax would have a huge profit because they would have sold a big sale to the Fed. So how much data are they using? How are they coming to these numbers? We're going to break it down tonight on Jazz After Dark. All right, I'll take your questions if you have any. I'll let this kind of pop out, do its thing there. In the meantime, tomorrow we're going to have AutoZone. We had Disney after hours there. Look at the theme parks, man. That's where the money's at for them lately. You got Wynn Resorts after hours, Whole Logics, Capri, U.S. Foods, Tapestry. So we're getting into some of the retail names at the end. And also, I don't know, 1, 2, 3, 4, 5, 6 Fed members speaking tomorrow. Yay. That should be interesting. I think we have a nice little tip here. More salt, more flavor on the Utz potato chips. I will check that out. I haven't been a Utz connoisseur here lately because we just started really seeing them in Florida. Lucid Plant parking lot is stuffed with cars. They buy you? Oh boy. Jeff says you're a stock picker, but do you ever? Well, no, I'm not a stock picker. I like to build the equivalent of what an ETF would be. So I will never ever just say I think that stock's going higher. It all has to meld into what we have. So for example, if I bought AT&T, Verizon, and Tesla, right? Okay, what is that? Right? We would never do that. It'd be too much risk for someone who wants to do like a dividend portfolio or wants to be a little bit more conservative. And no, we don't invest in mutual funds. There's just an added cost there. Why have the added cost for clients? We got rid of that. Yeah. You got a couple stocks there outperforming in the different sectors. So Doc took a different look at it and said, well, let me look at the sectors and find stocks that are outperforming in the sector. I still would argue it's like, how do you I get what the news was on Eli Lilly today, but how do I jump in on that now? Do I jump in on that? It's kind of a tough one. Yeah. DIYer says, do you have a video on how to read a quarterly earnings report? I believe so. It would be really old. I believe we did a Wine and Wealth on that way back, like other office type stuff. That's a fun one to come back to. That gives me an idea, actually. Yeah. Lucas says, does that mean I'll have to sell my positions soon in your Robinhood account? Well, that would help them out. We'd put a couple orders out there so they can make a few bucks off you. But no. Yeah. Landon scalping penny stocks. Okay. Tough life over there. Utz crab chips. Okay, we got to stop on that for a second. It's a crab chip?
I believe he's referring to the Old Bay season.
Oh, Old Bay season.
Yeah, the Old
okay.
Bay.
That's
Actually,
right.
They're good.
No, that's right. That's a smart move right there. Put some Old Bay on chips.
Yeah.
Okay, I'm going to go hunt those down.
Yeah.
I think I've seen them somewhere. Oh, man. I love it there. What do you think of the Shiller, PE, and other indicators? Seem the stock market is always overvalued based on these. Yeah, there's... who did it? I want to say it was Susquehanna, one of the really, either that or the CTC, Chicago Trading Company, did a white paper on that, kind of pointing out some flaws and how to correct them. So they weren't just bashing them there. It is with the Old Bay. Yeah. Thoughts on looking forward to 2024? If you like election stuff and politics and stuff, it's going to be great. I'm not looking forward to it. But we still have a ways to go. No immediate thoughts on this on the next year just yet. I do think you won't see a Fed cut so early in the year as expected, but I'm not sure what else you mean by that. Anyways, I hope you learned something today, maybe from a different angle than we normally talk about, right? A little bit of patience here. Let the next catalyst make that decision. You know what you can do if the market falls. You know what you could do if the market decides to rally from here. You now have a game plan. If it's going to go sideways for, let's say, the rest of the week, so be it, right? You've got your homework done on both sides and you're ready to roll there. All right, I'm going to wrap it up and get on out of here. I got more work to do. Appreciate you guys hanging out with us. We'll see you later on the Jazz After Dark if you're going to come hang out with us. And thanks for watching.